Hey guys, how's it going? It's Andy from Magoo Investing. Happy Monday. So I woke up this morning and this is the first time that I've actually not been in school for MLK Day. And so I woke up this morning and definitely forgot that the stock market was closed. And I remember seeing a comment on one of my videos last week saying that they were going to buy some GE stock on Tuesday. And when I first saw that, I was like, okay, that's interesting. Why not buy it on Monday if you want to buy it? But now it all makes sense. So today I decided this would be a good time to make this video that I've kind of been putting off for a bit. Last week I told you to leave your guys' stocks that you guys want me to discuss in the comment section. And today I'm going to be talking about all of the stocks that you guys put for like the first 3 videos of last week. And I'm thinking about making this a weekly thing, so if there's a stock you guys would like me to talk about, probably towards the end of this week or going into next week, be sure to leave that in the comment section down below. These stocks are not in any particular order. It's based off of which stock was commented first. So there are timestamps in the description below if you'd like to bounce around or if I'm talking about a stock that you don't really care about. Just a reminder that I'm not a licensed financial advisor and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, really appreciate it if you hit the like and subscribe button, as it would help my channel out a lot. With that out of the way, let's talk about the stocks you guys are looking to buy at the beginning of 2021. I do want to say that a lot of these stocks I have never talked about, and so that makes it pretty exciting because I did have to do a little bit of research. I did not go super in depth on a lot of these companies, but these are just kind of my first opinions of these stocks that a lot of them I've never heard of before. So the first stock that was commented is Ameritech Ventures, ticker symbol ATVK. And when I looked it up, it is trading for 26 cents. And then the second one is Transportation and Logistics Systems, ticker symbol TLSS, which is trading for 6 cents. And so I haven't really talked about penny stocks a lot on this channel, but my whole idea is that I want to be buying stocks that the price movement is based off of how solid the company is run, not based off of momentum or hype. So I've always stayed away from penny stocks, and I'm going to be staying away from these 2 stocks at all costs. There is things put in place for the New York Stock Exchange that make sure that companies, the stock price stays above, I think it's $1 for the past 30 or 90 days. And so that ensures that you don't have a lot of these stocks that are trading under $1, and that's why I haven't talked about any really cheap stocks on this channel. Number 2 is going to be China Mobile. I will say that I mentioned China Mobile I guess that was last week, when I talked about Chinese stocks and how I felt about them overall. And China Mobile was one of the 2 other telecom stocks that were removed from the New York Stock Exchange. So as a result, we can no longer buy them in the US. So China Mobile is going to be we can't buy it here. So I have no opinion on it. Next up is going to be Enphase Energy, which is ticker symbol ENPH. So this is not a stock that I've talked about. I did a little bit of research on it when I was talking about my renewable energy stocks. And this was one that I debated talking about. It's currently trading for $190, and it was down almost 9% on Friday when a lot of energy and renewable stocks were down significantly. It did have an incredible 2020, being up around 550%. So this is a solar stock that has done very well in the past couple years. Some of the really exciting stuff that I saw when I looked at this company, they're definitely going in the right direction with their net margin becoming much higher and their earnings finally becoming positive. So I'd love to see that. But when you compare this to some of the other companies in this sector, the PE ratio is up around 200 compared to my favorite solar stock, which is First Solar, ticker symbol FSLR, which is sitting around 20. And so if you've been around this channel for a bit, PE ratio is not really something that I use to be the deciding factor of which stocks I really like to buy. I've always said that the only time that I really look at PE ratio is for well-established companies that have been around for a long time as a way to judge what type of value you're getting. And I only use it to compare the historical range of one company and not compare it to another one. But just comparing the PE ratios of the 2, a PE ratio of 200 is pretty high, especially for a company that's been around for a decent amount of time. The main difference in Enphase compared to something like a First Solar is the type of business that they run. The reason that I really like First Solar is that they're focusing primarily on solar panel manufacturing and the selling to major energy plants compared to something like an Enphase, which is mainly selling solar panels to residential neighborhoods. So they're doing a lot more of the individual sales, whereas First Solar is doing the manufacturing. In the past couple years, we have seen a switch in the US market for solar panel manufacturing. It used to be the problem where China's solar panels were so cheap that it was really hurting the overall market. And now we've got places like First Solar that are now doing it cheaper, and it's just taking a lot of the demand away from the Chinese market, and we've been seeing a real boost in solar energy stocks. So Enphase, I am pretty excited about. I think solar stocks are very interesting. I think the initiatives that we're going to be seeing with the next presidential administration is going to be very exciting for companies like this. You do have the problem of, I think the market that Enphase is in is definitely more competitive than something like a First Solar, so that's going to be something to watch. But I think the long term for solar is very positive. It's just the potential that maybe Enphase is a little bit overextended right now. So that would be something that I would consider if I was looking to buy in. Personally, I still think that First Solar is my favorite solar energy stock, but that's just my opinion. Next up, we're going to be talking about 3 different stocks. We're going to be talking about Etsy, ticker symbol ETSY, which is trading for $204, and it's already up 15% on the year. This was a stock that was up more than 300% in 2020 as a result of the pandemic, pushing a lot of people towards selling and buying things online from smaller retailers. We've been seeing some of the e-commerce sites like Shopify, Amazon that have done incredibly well. And I think Etsy is one of these companies that kind of gets forgot about when you talk about e-commerce stocks. They did see huge growth in 2020 with a 97% increase in revenue, but analysts are expecting to have their revenue only increase by 12% in 2021. In quarter 3, 11% of their gross merchandise sales came from face masks, but when you do exclude those masks, they did see a 93% increase year over year. So this is one of these companies where every time I see a stock that did incredibly well in 2020, the first question I have is, was that growth sustainable? And when I've talked about stuff like Peloton, I think that their business model is so sustainable, and I always talk about why their retention rate has made me feel very bullish on the company. When I look at something like an Etsy, I'm not as confident that these numbers are going to stay as high as they've been. I think this is a stock that will have higher numbers in 2021 compared to 2019, but I do think we might see a contraction in their overall sales as physical retailers hopefully open up by the end of the year. So this is why I'm a little bit worried. They have seen incredible growth from their stock price in 2020, so that does make me feel a little bit worried about the longevity of the company, that we might be seeing a pullback. Personally, I would put something like a Shopify, ticker symbol SHOP, slightly above it because it is a larger business when it comes to overall scale. But that's just my opinion. I do like Etsy. I'm just a little bit worried of an overall pullback. Next up, we're going to be talking about Riot blockchain, ticker symbol RIOT, which is trading for just below $26, and it's up 51% already in 2021. So this was a stock that I mentioned in my Bitcoin video, and I wasn't really sure how I felt about it. But when you look at their mining revenue, it was up 41% year over year, and they did mine 730 Bitcoin in the first 3 quarters of 2020. They have been expanding rapidly with an expected increase to their hash rate capacity by 65%. For people that haven't really gone in depth on what Bitcoin mining looks like, hash rate is basically the processing power of the Bitcoin network, and it also represents the productivity and efficiency of the machines that they're using. So they're expected to increase in size, and they're expected to be more efficient going forward. While I do like the idea of investing in mining, the all-time chart for Riot blockchain, ticker symbol RIOT, does scare me a little bit, and that makes me feel like I'd rather personally just buy straight into Bitcoin and take the ride of the success of Bitcoin instead of having to worry about the mining operations. But with the information that I could find, I wasn't able to see where this all-time chart comes from, considering the stock price goes back to 2005, but Bitcoin was created in 2009. So not really sure about that. Whenever I see this lack of information, that's usually a sign that I want to stay away from a company. Something with Riot going forward, it's going to be interesting because it's very reliant on the energy costs going forward. And since I've been super bullish on green energy going forward, and Bitcoin miners have reported they use a decent amount of green energy, it's going to be interesting to see if the success in green energy initiatives go hand in hand with Bitcoin mining and reduces the overall cost for them. So as of right now, I think I'd personally rather just buy straight into Bitcoin, but these mining companies like Riot and Marathon are pretty interesting. And then the last stock that this person wanted my opinion on was Futu, ticker symbol FUTU. Stock is trading for $69, and it's a digitized brokerage and wealth management company that operates out of Hong Kong, China, and the US. And in the US, the company is called Moomoo. Their largest investor is Tencent, and that kind of scares me a little bit. I made a full video talking about how I felt about investing in Chinese stocks, and kind of the overall summary of that video is that if I was not investing in the top dogs like an Alibaba, JD, or a NIO, or even Baidu, I'd be a little bit worried just based off of the transparency issues that we've seen with these Chinese companies. We've been seeing some legislation going through that would require the Chinese companies to be more transparent what they're doing with their finances, but it does take up to 3 years for any penalties to be levied against a company, so it's not an overnight fix. The stock IPO'd on the New York Stock Exchange in early 2019 and has seen a lot of success considering its IPO price was around $20 and it's now up to $70. So it is interesting. It is a brokerage, but since I don't know a lot about it, I don't use their product, Moomoo, in the US, I'm personally going to be staying away from a Chinese company that I don't have a lot of experience with. And then a stock that was requested the most, considering it was requested twice, is ICLN, which is the Clean Energy ETF. It's up 150% in the past year, and it's up almost 270% in the past 5 years. I've been very bullish on clean energy and renewable energy stocks in the past, so it does make sense for me to like a company like this. I've made multiple videos on green energy, and I think it's one of these sector is it's going to do incredibly well in 2021, and that's why I put GE as being my top stock for 2021, because I'm expecting to see some incredible growth in this sector in 2021. Looking at their holdings, it is interesting that Plug Power, ticker symbol POUG, is at the very top, and it makes sense why they've had such an incredible 2020, being up 150%, when Plug Power is up 1,300% in the past year, and that is their largest holding. Personally, I would rather take my individual picks for renewable energy stocks. I would happily buy into GE, NextEra Energy, ticker symbol NEE, or Brookfield Renewable, which is ticker symbol BEP. But I like ICLN, and I think it's fine for maybe if I was in the situation where I want to be investing in a sector, but I don't have as much experience, or I don't know which individual stock I would like the most. That's why when I've talked about investing in stuff like weed stocks and biotech, it's that it's hard to pick a winner in a sector if you don't have that much experience with that sector. So if I was pretty new to investing in clean energy and renewable energy stocks, I would consider something like an ICLN, since it is the ETF and it does follow the overall broad market. I am kind of worried with their largest holding being Plug Power, considering it's seen a 1,300% increase in the past year. Kind of similar to what we talked about with the ARK ETFs, where their largest holding has had an incredible year, and that could kind of skew their overall results. But they do have the track record of being up 270% in the past 5 years. So I'm going to put ICLN as a thumbs up as being, I think, a pretty decent option. Next up, we're going to be talking about Intuitive Surgical, which is ticker symbol ISRG, which is trading for $778. And these are the people that make the Da Vinci robot. And so when I was sitting here, I saw the Da Vinci robot, and I was like, where do I know this name from? And then I remember that Michael Reeves made a video where he made his own surgical robot because he saw how expensive these Da Vinci robots were. And if you missed that video, highly recommend watching it. It's pretty funny. These robots can cost up to $2 million, and there has been some discussions about whether or not it's worth the overall price tag, considering that many doctors have been saying that while it's nice to use, it doesn't really make the operating process more successful. And so they're talking about whether or not it's worth buying these when there are cheaper options out there. The all-time chart is pretty beautiful, and they've seen incredible growth over the past couple years. And the revenue charts show solid growth with a recent drop as many hospitals are putting off spending on elective surgeries, and we've been seeing that across the board when it comes to these health companies. So as of right now, I don't like buying into these medical stocks. It's not an industry that I love. I don't like the idea of for-profit healthcare, so I'm going to be staying away from it. But based off of the charts and the revenue, it does seem like a decent investment going forward. But just based off of my own personal opinions, I would be staying away from it. Next up is going to be KFVG, which is trading for $28.28, which is very nice to look at. And I had to look up because it said it's traded on the NYSE ARCA, which is not something I've ever seen before. I guess it's just a subsidiary of the New York Stock Exchange that trades options and stocks. So KFVG is a Chinese 5G and semiconductor ETF, which seems like something I'd want to be a part of because this is an industry that's expected to see explosive growth in the next couple years. It has only been trading since the middle of December, so there's not a lot of track record for that. And as I've talked about with my Chinese stock videos, I want to see a track record that I can follow, which this doesn't have, and it just makes it a little bit too scary for me. And so this is something that I'm going to want to look back on in maybe a year to see how it's done. But as of right now, it's too new, and I don't really understand the industry fully, so I'm going to be staying away from it. Next up is Kosmos Energy, ticker symbol KOS, which is trading for $2.73. And my first impression is that it's a little too cheap for me just based off of the overall price, but it's not a deal breaker. Looking at the 1-year chart, it's down almost 60%, and the 5-year chart, it's pretty all over the place. And at first, when I saw the name of this company, I kind of expected it to be a renewable energy or a green energy stock, but it's just another oil company. From their website, it says that they are a leading deep water exploration and production company, and I personally don't want to be buying into any oil or gas companies just based off of the fact that I am a marine biologist, and I think going away from fossil fuels is a huge step that we need to be taking pretty soon. Also, I think this is a dying industry that has not seen a lot of success recently, and so I don't see it as a better option than renewable energy because it has such a high potential for growth when I think that a lot of these oil and gas companies are just going to be contracting in size over time. So based off of that, I'm going to be staying away from Kosmos Energy, ticker symbol KOS. And then the other stock is going to be AirBnb, ticker symbol ABNB, which is trading for $169. It's only been trading on the New York Stock Exchange for about a month at this point. And here's how it's performed when I put up the chart. Personally, I don't like Airbnb stock for a couple reasons that I'll talk about. Right now, I think the travel industry has a lot of optimism that the recovery with the vaccine stuff is going to happen sooner rather than later. And when I've talked about investing in companies that are kind of struggling, I want it to be a type of industry that the company can make the changes themselves. They don't have to wait for any external forces. And the travel industry, is reliant heavily on healthcare and the new administration coming in. So based off of that, I'm a little worried based off of that. Number two, I don't like buying IPOs right after they have gone public, just for the fact that the share lockup period usually results in some high selling pressure, especially if the IPO was done well, which is what we've seen a lot in 2020. Recently, we saw the LMND stock IPO, which did incredibly well, and then after the share lockup period expired, it dropped around 10% after insiders were finally allowed to sell and take their profit. So right now, I don't see it as a great buying opportunity. And number three, it just feels like everything is based off of hype and expectations, and that is not something I want to base my trades off of. So maybe in the future, after the pandemic hopefully goes away, I'll look back at Airbnb and maybe see it as a buying opportunity. Right now, I see too many external forces that could impact the success of the company. So as a result, I'm going to be staying away from it. Another company that you guys wanted me to talk about is NIO, ticker symbol NIO. I've been talking about NIO for a couple months at this point. I'm very bullish on it. I do have the worry that since it is so overextended, any bad news that they might have might result in a huge sell-off. But it's a very impressive company. They've seen rapid growth. I think their battery swapping program, which is going to bring in reliable revenue, I think is a great idea. And I think we're going to see companies like Tesla trying to implement that in the future. But yeah, they've seen explosive growth, and I don't have anything really negative to say about the company, besides the fact that it is up like 1,000% in the past year, so it does have some pullback potential. But we've just been seeing incredible growth, and if I wanted to invest in an EV company, I would heavily consider either NIO or Tesla. So very bullish on that. And the last stock of today's video is going to be Teradyne, ticker symbol TER. It's currently trading for $137, and they make testing equipment and has customers that include Samsung, Qualcomm, Intel, Texas Instruments, and IBM. Looking at the charts, things look pretty beautiful with a gain of 600% over the past 5 years, which is hard to find when you look at the overall stock market for a company of this size. It's hard to find other analysis of the company, which makes me not as likely to buy in. But since it is in a growing industry with some very high profile customers, it does make me feel pretty good, and the track record is fantastic. But personally, I don't think I'll ever buy this company because I don't really know how the company works, even though they do have this incredible track record. So these are the stocks you guys wanted me to talk about in last week's video. If you guys put a comment in on a video from last week and I didn't talk about it, I'm sorry. Be sure to comment it again, and I'll try to get to it for this week's video, where I'm going to try to make this a regular thing because I like talking about your guys' favorite stocks instead of just kind of rotating through the top like 100 stocks that I like. So thanks for watching this video. I hope you guys have a fantastic week, and I will see you in the next episode.